According to this Reddit post, a user is asking whether AlphaPix from Seeking Alpha is worthy to subscribe given they have outperformed the S&P 500 by 50%. But no, AlphaPix has actually outperformed the S&P 500 index by more than 80% at the time of my recording. So how do they actually achieve such an amazing feat? In this video, I'm going to break it down to you and also share on their strategy, track record, and even their regular stock analysis articles. Stay until the end of the video because I'm going to review 3 interesting picks from their portfolio as well. Okay, right now we are at the Seeking Alpha Pick stage over here where I'm going to share with you what is it exactly about. Alright, so for a start, you can just go to the portfolio process where I go through the buy criteria, the selling criteria, and their strategy characteristics. So first of all, let's take a look at the buying criteria. Okay, so basically over here they are saying that they identify the stock picks from their own proprietary quant recommendations, and these picks must meet the following criteria. So it has to be a strong buy quant rating for at least 75 days, US common stock, not the REIT, market cap must be above 500 million so that there's some free float or things like that. There's enough trading volume to drive the share price up going forward, as well as the stock price must be greater than $10 and not recommended in the past 1 year. So if I were to reiterate this whole process of the buying criteria, is more like they're finding winners who are already on the up move, and they have to meet certain proprietary indicators and further have more upside potential. Okay, so they are going to pick 2 strong buy rated stocks every month for you. And when do they sell the stocks? So they notify subscribers via email when they want to close out or reduce the position, and they sell the entire stock, okay, if any of the following occur. So the rating, forced to sell or strong sell, or forced to hold, and they remain at hold for 180 days. Okay, or like let's say there's any acquisition or merger and things like that. Or the last part is where the position reaches 15% of the portfolio. So you'll be reduced to 10% to avoid a concentration risk, which I'm going to share with you in the next stock pick, right, by AlphaPix itself. But before that, let's take a look at to wrap up, right, here's the strategy characteristics. So this is a style, okay, designed for buy and hold investors aiming for long-term capital appreciation. So if you are a dividend investor, you will not be really keen on this because they are more of the strategy of buy high already established companies and look to hold it for the long haul. Okay, and the size, of course, it has to be more than 500 million. Frequency of the trading will be around 2 to 3 trades per month. So far, I haven't seen a lot of sell trades. What I'm seeing is more on the buy trades. Okay, so maybe 2 buying trades every month and maybe 1 sell. So it make up to 2 to 3 trades every month. And it's going to be a buy and hold strategy, right? So they are going to hold positions for at least 1 year. Alright, so now let's move on to the 3 stock picks that I've been telling you about. There's one stock that literally carried the entire portfolio, and it's none other than Supermicro Computer, or SMCI in short. So this subscription service picked up this stock on 2022 November, and they purchased it at a low price of $85. So you can see that there are actually 2 positions right now. Okay, so one has been closed and one is still open at the time of the recording. And they have actually sold it, okay, at $910, translating into a return of 968% returns. So why do they choose to sell part of this position? The reason is because they want to mitigate the concentration risk. So like what we mentioned before, right? So they have this policy, okay, inside the strategy, whereby once it crosses beyond a threshold of 15% weightage in the portfolio, it will be reduced to 10% to avoid concentration risk. So you can see how they are sticking to their strategy. And in fact, okay, it is already up 1000% since the addition to the Alpha Pix portfolio. All right. So these stock proceeds will be then distributed on a equal weighted basis among the other portfolio holdings. So now let's jump over to the other two stocks that you may be interested in. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel and ring the bell so you get notified every time I release another stock analysis video. Next up are these two other picks, Okta and PepsiCo, which are both very different companies, where Okta is an identity management software firm and PepsiCo is in the fast-moving consumer goods sector with brands like Pepsi, Lay's, potato chips, etc. So now let me show you a sneak peek of their respective recommendation articles as well. Okay, so over here you can see this is from Okta, okay, and this article was written on 15 February and they have already 285 comments at the time of the recording. So you can see, like, you know, they already have a very big loyal pool of subscribers who always engage with the analyst team itself. So you are not left alone per se when you subscribe to this service. Okay, now let's take a look at the summary points. Okay, for Okta is like the tailwinds from remote work, AI, and cyber security, as well as the significant revenue and subscription growth. All right, 20 consecutive earnings beats. Their market is growing. Also, the projected market size will be gonna be 34 billion by 2028. Okay, so basically, all in all, is leading to improved profits and cash flow. So on top of that, right, what I like about Alpha Pix is that they provide a good business overview of the company and a very short and sweet one. So for example, if you don't know what Okta is all about, you can check out this and how they put the market size potential right up in front for you. On top of that, the main differentiating factor from AlphaPix with the other, stock investing subscription services is this quant rating that they have, okay, which is from Seeking Alpha itself, and the factor grids. All right, so right now you can see based on these five factors: valuation, growth, profitability, momentum, revisions, what is the current grade per se. All right, and they sort of like cover the various grades and what to expect. Okay, so for example, they talk about how the sector growth is a A minus, okay, and profitability is A minus. And when they talk about stock valuation, they say that the PEG ratio is around 2 times versus sector 2.05 times. And then they talk about their growth rate, okay, and the potential risk as well. So competition is a factor with Microsoft, Oracle, and IBM. And last but not least, they also provide a conclusion. Next up is PepsiCo. Okay, so PepsiCo written on January 2024 and also quite very popular stock with 133 comments for this, established household brand. Okay, so I mean, I'm not gonna go through this much, but basically, one thing that stands out to me is this dividend king with 51 years of consecutive dividend growth. So same thing, business overview from AlphaPix. All right, how is strong brands in the fast-growing categories, products in more than 200 countries, control 23% of the market, and stuff like that. Apart from the Seeking Alpha, valuation, the growth rates and stuff like that, they also provide these dividend grades. So where they talk about how safe is the dividend, what is the growth, the yield, and the consistency. So I believe that this is really a a shortcut for you to find dividend growth stocks. And last but not least, like what I shared, they also based on the quant ratings and cover the stock valuation. They talk about the PE, the PEG, as well as the potential risks involved. One common thing I can draw from these two stocks are their share price momentum. You can see how they have been increasing over the past 1 year. Although Okta is still like below the 5 year average, but over a 1 year period is actually growing. Okay. Same thing goes for PepsiCo. So in the past year, it has share price growth momentum, and that's the reason why it is included in Alpha Picks. On top of that, we all know that the US market moves extremely fast. Alpha Picks keeps you ahead of the curve through their frequent articles and the portfolio review webinars. So this is how the webinar looks like. And the best part is you get to ask questions live in the webinar there and then. Something that I find quite enriching and beneficial to investors looking for some sort like a support. To wrap up, right? Alpha Pix has performed very well since their launch in 2022 by offering a combo of the quant-based modeling and the premium stock analysis articles, which is very different from other stock picking services out there. You can also take comfort in their track record, right? It's already proven, where they pick big winners like SMCI, Meta Platforms, Uber, etc. But that being said, I do agree that the pricing is slightly a bit on the upside of 499 US dollars. But if you are looking for stock ideas to outperform the broader market index, Alpha Pix is definitely worth considering. And if you are ready to give it a try, check out my affiliate offer in the pinned comment down below, or $50 discount or any other promotion they have from time to time. Before we end off, if you find the video helpful, I would appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.